Deirdre, Prada, the luxury brand whose third attempt to go public was suspended last year, has been approached by the Bonomi family and buyout firm TPG. They're interested in taking a minority stake. This is according to 4 people familiar with the situation. A big scoop for Bloomberg on Friday. And for more on this story and more on luxury goods, we're joined by Bloomberg team leader Keith Campbell. He's in charge of that luxury goods coverage. He's in London this morning. Keith, explain to us why on earth would the likes of the Bonomis and TPG see an opportunity in Prada, perhaps an opening to get in there when others might say there is none?
Well, Prada is a very, very strong brand. I mean, they've been around for a while. The 1990s is when, I guess, most of their buzz was really created. But they've seen themselves in the 90s as a competitor to LVMH and to PPR, kind of creating a big conglomerate, professionally managed, as opposed to the small Italian family house. And they've always been kind of trapped between these two models. So that's why they kept trying to go public. 3 times they tried to go public and raise some cash to expand, to build a big store network. Each time they never quite got it together before the market went south. And so their IPO got canceled at the start of this year when it became apparent that the market wouldn't really take it. So if you're a big family investor like the Bonomis or TPG from private equity, you may be seeing here a chance to get into a company that needs the cash. These stories keep reappearing that Prada is out there looking for an investor.
Okay, so if Prada's looking for an investor, would like to go public, do we have any reason to believe that maybe they will open the door to the likes of TPG, perhaps another private equity firm, or the Bonomis? What is our reporting telling us?
Our reporting is telling us that despite the fact that on the record, Prada denies anything is going on, there are no talks, they've said this to us a couple of times, still these reports keep happening, these talks keep occurring. And, you know, we had 4 different people saying these talks are going on. So why would you keep having these talks if something wasn't eventually going to happen? I don't know if it's a situation where we're going to see a movement this year, but by next year, especially if the luxury goods market hasn't recovered, I would not be at all surprised to see something happen.
All right, well, let us talk, though, about the luxury goods market recovering, because we also heard from Gucci on Friday, and they were sounding a somewhat positive note, wouldn't you say?
Definitely. Gucci, the guy who owns Gucci ultimately is François-Henri Pinault, known for being married to famous Hollywood people and having a thoroughly glamorous life. He's back in a good mood again. He tells us the luxury goods market has bottomed out. His family owns PPR, which is a French retailer that ultimately is the parent company of Gucci. So after Lehman Brothers went bust, that's when the average luxury goods consumer in emerging market stocks or in Wall Street started thinking, maybe this recession will actually affect me. And the luxury goods demand fell off a cliff. The recovery was slow in coming. For 6-7 months, we've had really brutal numbers coming out of most luxury goods companies. But last week, it was first Louis Vuitton and then Gucci reporting 8% sales growth. And the stock just took off. The stock is now dug itself out of all the hole it's had since the Lehman went bust in September.
Okay, Keith, I got to jump in because one last question with we got 30 seconds to go. What's this about Gucci concerned that its brand is getting a little too trashy?
Well, I wouldn't use that word, but certainly last year, some of the stuff they were doing was earning the wrath of fashion critics out there. In particular, Robin Javon, she writes for the Washington Post. She was scathing about a €400 Joy canvas bag that Gucci was making, saying, in a memorable phrase, it looked like something you'd pick up on Canal Street. It was covered in logos. Usually, you can't really draw these guys who run these companies to characterize the brand that way, but I was surprised. Robert Paulet, who is the CEO of Gucci, he said that the brands are going to be less ostentatious in the recession.
Keith, we got to run.